Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of comparing two forms that are commonly required for U.S. persons with foreign accounts, 2021 update, FBAR versus 8938. Let's go through the basics. The Form 8938 is a FATCA form, Foreign Account Tax Compliance Act. It's how U.S. filers report their foreign accounts, or technically their specified foreign financial assets, to the IRS. So it's more than just accounts. It includes life insurance policies, investments. It includes ownership in hard assets such as foreign corporations, or possibly cryptocurrency that's still sort of on the cusp of whether it's reportable or not. Depends on how you hold it. Foreign pensions, things of that nature. So unlike the FBAR, the Form 8938 is actually part of your tax return. It's filed with your tax return. In other words, if you were going to file your 1040, the 8938 is part of your 1040. If you're using commercial software, Tax Act, TurboTax, typically it will be included in there, unlike the FBAR that we'll get to in a second. There are different thresholds for reporting depending on whether you're a U.S. person and live in the U.S., or you're a U.S. person that lives outside of the U.S., and whether or not you're filing married filing joint, or single married filing separate. One thing to keep in mind is generally the Form 8938 is not required if your tax return is not required. So in other words, if you're not required to file a tax return in the current year because you're below the filing requirement, you don't earn sufficient income, let's say, then you don't have to file your tax return just to file the Form 8938, which is different than other forms like the 5471 and the 8621, which are required even when a tax return is not required. The FBAR is Foreign Bank and Financial Account Reporting. It's not handled under Internal Revenue Code Title 26. Instead, it's handled under Title 31, which is Money and Finance. It's a reporting form. It has nothing to do with taxes. You may not have any tax liability. You still got to file this ridiculous form. It's handled by FinCEN, Financial Crimes Enforcement Network, or let me be a little more accurate. It's a FinCEN form, Financial Crimes and Enforcement Network Form 114. But since 2003, the IRS has taken the reins with enforcement of the penalties, and they can be pretty brutal. The FBAR has a very low threshold. It's more than $10,000 on any day of the year. It doesn't matter your filing status, if you live in the U.S. or not. The form is required even if you're not required to file a tax return. So for a lot of U.S. persons who may, for one reason or another, they don't have to file a U.S. tax return, but they meet the FBAR threshold requirement, then they're still required to file. The due date is April 15th, but it's on what's referred to as automatic extension. With the 8938, in order to get an extension to file that, you have to file your regular extension for your tax return. 8938 is part of the tax return, so it goes on automatic extension. With the FBAR, it's an automatic extension without having to do anything. So in other words, with the 8938, you have to file the extension for your tax return, and the 8938 goes along with it. For the FBAR, you have to not do anything except file the form because it's an automatic extension. Currently, this could change, so you always want to check that, right? Because the penalties can be tough. Get to that in a second. But essentially, if you have the foreign accounts, you meet the threshold, you file the FBAR, whether or not you have to file a tax return. Now, the most important part for most people is the penalty, right? The penalties are different. The 8938 penalty starts at $10,000 per year, and then there can be a continuing penalty if you don't file it, up to about $50,000. So they could probably get you for a combined penalty of $60,000 for the 8938. The FBAR is wildly different. It's willful versus non-willful. Non-willful is, willful is $100,000 or 50% maximum account value, whatever is higher. Okay, there are potential mitigating factors, but typically $100,000 is the floor. Noting that that $100,000 adjusts for inflation, so it's more like $130,000 now. Okay. With the FBAR, non-willful, it's not even based on the account value other than the maximum they can get you with. So it's $10,000 for violation. But what does that mean? Courts differ on what that means. Does that mean $10,000 per account per year, $10,000 per year, one $10,000 penalty for the whole shebang. It depends. A lot of courts have come out recently with findings or rulings that, you know what, the non-willful penalty is relatively new. I think 2004 is when it came out. We're going to limit it to $10,000 per year. So for someone with a significant amount of money overseas, you know, that's welcome. Versus you have 50 accounts with $4 million and you're getting dinged $10,000 per account per year for 6 years. That's a pretty nasty penalty. If you're worried about any of this and you're out of compliance for prior years, there are various programs you can use to get into compliance. If you're willful, there's the Voluntary Disclosure Program, VDP. If you're non-willful, there's various programs available: Streamlined Filing Compliance Procedures, Reasonable Cause, and Delinquency. We have a lot of free information available on all our different websites. You can always reach out and schedule a reduced fee initial consultation if you think it's appropriate. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.